Hey everyone, welcome back to the MHP Show podcast. I'm your host, Derek Vickers. On the MHP Show, we're talking mobile home parks, manufactured housing, trailer parks, if you want to go that low and call them that. But we're talking about everything associated with that management operations, how to underwrite, how I'm looking at deals, how I'm looking at the economy, and anything else that we can talk about here on this show. And yeah, before we get started, look, if you are a investor and you're like, man, I'd love to get into mobile home parks, and then you realize that, like, man, it's a lot of work. It's a lot of work. And look, you want to invest with you still want to get into this business. You know, it's recession proof, and you skate below like standard, most of the macroeconomic trends versus other asset classes. And if you're like, man, I love that and I want to invest, go to victorycapital.com, VICKTORY capital.com, and go to offerings. You can log in and would love to get you some information on that. You can reach out to me on the social media platforms because look, your money's dying in the bank. I don't know how many times I have to say this. Your money is dying in the bank. And if you're one of these guys that's been, hanging around this business forever, and I've talked to some of you guys and you're like, yeah, I'm waiting to get my own deal. And that's great. And that's fine. But like, are you going to wait 5 more years? And then it's going to be 10 years. And so the money that you didn't invest has died even more. And if they do some sort of money printing again, some quantitative easing again, look that up if you don't know what it is, then your money's going to be worth less. I mean, think about it. If you were hanging on to money in 2019 and said, yeah, I'll wait to invest. I'll wait, I'm going to wait. I'm going to get my own deals. And then in 2020, you're like, man, stuff's too expensive. And now 2025, you can't buy anything. Plus your money's already died. That was, your money is dead. That was in the bank. Now, I do agree that you should have some cash on hand. But in the type of economy, a debt-based economic system, you actually lose by having cash sitting around. You win by owning assets, even if you don't own it all yourself. Anyways, would love to answer more questions for you. Just go to victorycapital.com. Again, you can reach out to me on social media platforms. You can schedule a call with Milton or I, and we'd love to chat with you about our offerings. Our Fund One offering is doing extremely well right now. We've got 7 properties in there. We've got some others under contract that we're potentially closing, and would love to chat with you about that. So yeah, you can go to victorycapital.com. Okay, so now today, I always get on here and I'm like, what am I going to talk about today? I know some people get on a podcast and they're like, man, let me just really go through and see what I'm going to talk about today and get my bullet points and whatnot. I actually do better on the fly. I do better on the fly. And I just have a lot of fun doing it. And I get good feedback from people that they love the show. But I just got back from MHI in Vegas, which was a great time. Went to some great events, talked to some great people. Shout out to let's see, where do we go? Shout out to Jimmy Johnson to getting me on the roulette table for the first time in a while, and we had a good time doing that. So shout out to Jimmy at Sand Dollar Communities. If you don't know him, hit him up. Who else? Manny. Shout out to Manny at MSS Capital. We had a good time hanging out at MHI. Shout out to Marcus and Milchap. Dustin, you guys put on a great little party there. But the best party that I went to was actually a late night networking from Avon Real Estate, the California guys. I think I said that right. If I didn't, sorry about that, guys. But we had a late night. It was like a networking thing in one of the like penthouses at the MGM Grand. So that was a freaking awesome event, and definitely the best event that I have been to at an MHI event. And I've been to a lot of events. So anyway, so that was a lot of fun. It was always good talking to people around the industry and things like that. And I had some takeaways off of just meeting people. And this is actually not what I'm going to talk about today. I was going to talk about something else, but Yeah, I mean, I had some great takeaways, and we talked to 21st Mortgage and Clayton, and we have some things going on that where we can, I'm actually getting a little bit more bullish on bringing homes into parks, and streamlining that process. So that was great, and I don't go to many of these conferences, and MHI is always my favorite one because um, it's the biggest one that like most people do go to, and yeah, it was great. So, learned a lot and look forward to meeting more people. And that, I even met people that, a guy we just bought a property from, 3 months ago, had a coffee with him. Great guy. Um, and so it's always good to meet people. You don't, you talk to people online, but you don't see them in person. So, what I'm going to talk to you about today, and I just kind of grab these topics because people always ask me this, and you think it's kind of easy. I posted about this the other day. It's like, how are you financing these deals? Well, it's way easier than it used to be. I didn't come in this business in an era where it was difficult to get these things financed. Now, I will say this. Um, if you're using a bank that has never done a mobile home park deal, it might be hard to finance that deal because you're going to be dealing with a bunch of knuckleheads that don't know this business and they think the park looks like crap, so they're not going to do the deal. But one of the ways that we found to finance these things effectively is through a local bank that understands the business. Um, not say like regional banks, but a local bank or credit union that has some exposure to mobile home parks, right? And so, that's a great way to do it because these guys, once um, the process is going to be much easier, right? And then once you get in with a bank, once they know you and your loans are performing for them, it'll be easier to do it. But how do you find those? Well, in the beginning, I was dialing for dollars to find those, and then a partner of ours had some lending relationships. We were able to figure that out and make that go right. But in the beginning, you may have to dial for dollars, or you can just pay a mortgage broker. Now, there's great mortgage brokers that are experienced in mobile home parks that they know where to find the good debt, and they know the banks that are lending on this stuff. So it's going to be a little easier to get the deals done if you go through these guys versus dialing for dollars yourself. And if you're cheap and you want to save a point, it's actually, yeah, it's a point on the loan amount typically to pay these mortgage brokers. If you're cheap and you don't want to pay that, um, then you're going to have to dial for dollars until you find a bank or you can get a referral from somebody. Right. But I like using the mortgage brokers because I think if you treat them well and you don't jack around with them on their fee, like, yeah, up front it hurts, but like, long term, you're going to create a great relationship and you will be able to get things that they would not necessarily want to do for someone else because nobody likes getting jacked on their fees. So um I think it's a good thing to do, but that's going to be an easy way for you. And if you want some referrals on, who I use as a mortgage broker, you can let me know. But that is one way I would do it. Or again, you can dial for dollars. Now, the second way to do it is seller financing. And that's one of the reasons that I got into this business because I thought you could get everything seller financing. And out of all the deals I've done 2 seller financing deals. Wait, yes, 2 seller financing deals. Well, I have 1 under contract not right now, so that'll be 3. And I see these guys out there all the time, not necessarily mobile home parks, but these guys like, oh my God, do creative financing. And it's great when it works, right? But in a business where the asset class is scarce and there's more money coming into the asset class, you're not going to get the good deals via seller financing or some creative financing. Now, you will say, well, what's a good deal? Well, that's going to depend for everybody else. But if you're buying in a major MSA, you may get some seller financing terms, but it's not going to be some crazy 0% down shit that you see about online. And me personally, I want to have equity in the deal initially, unless I'm look, you can do 0% down if you're stealing it, but a lot of times I've seen these 0% down deals, you don't have equity in them and you still have to go in and do the work. So I don't necessarily like that. But if you're fighting with me on a deal, in one of the markets that we play in. But if you're in one of these markets that we're playing around in, like you and you're like, hey, I need to get this seller financing with this down, the seller's going to be like, yep, the guy's not serious. I'm going to the next guy, and they're going to go to Derek's contract. That's, it's not going to be seller financing, right? And half the sellers in Florida are pissed off because you guys call them and like you want to do seller financing, and immediately that tells these sellers that you're not serious. I know it's like it's just the way it is into this business. Like they're not going to think you're serious if you go in, searching for seller financing, right? I just would not do that. I would actually go out and try to find good deals. Like this deal we have under contract. I didn't go to the guy and say, hey, man, can I assume your loan and give you 0% down? And we're going to pay you with the cash in your bank account. And we're going to put a second on it. And then, like, no. I said, hey, this is a great deal. Here's what I'm offering. And then the seller comes back and is like, well, I'd like to finance this thing if possible. And we're like, okay, right. But, I go into the deal not caring. Like if they want to do seller financing, great. But if they don't, like, I don't care because I have a great lender that's going to give me, great terms. And quite frankly, if you're not giving me that great of an interest rate, I'll just be like, I don't want to seller finance. I'll just go through the lender. It's going to be easier because I'm going to gripe with you on terms. Now, I will say, be careful if you're trying to go in and just get seller financing. It may not work for you, and it's going to be easier for you to get deals if you don't care. If you don't care, you're going in and talking to these sellers, and it's just going to be a different conversation versus you trying to get seller financing on these deals. So I would not do that, and I don't do that, and I haven't had that much success doing seller financing. In fact, the deals that I've went in the beginning, because in the beginning I was looking to get seller financing only. And I think I've told you guys this story before, but I was hemming and hawing with the seller about a down payment because I didn't have the money. I was trying to do the deal by myself. And I ended up losing the deal. The guy wanted 50% down. I wanted to give him 50 grand down. And I was so like, it was just a bad negotiation. I was so like, oh my God, if he asks me for more money, he's going to realize that I don't have any money. And then he's going to find out that I'm not real, but this is a good deal. And if I would have just said, yep, I'll do the deal, 50% down, that's fine. Boom. And then went and figured out the rest of the money. But I also had a dumb idea that I had to do all these deals myself. Which is a dumb idea in my opinion. So that's one way you can do it. And it's great. Look, if you get great seller financing terms, and the deals that I've done seller financing are actually really great deals, and I've done well. But I'm not going into these deals just jamming and saying, hey, I'm only going to buy seller financing deals. Because you're going to have a deal in Indiana, you're going to have a deal in Arizona, you're going to have a deal in Tennessee, you're going to have a deal in Alabama, you're going to have a deal in, Canada, Alaska. Like it's going to be all over the place, right? You're not going to be able to find that many seller financing deals in a cluster of parks, because in my opinion, I think it's better to hit areas, get a bunch in an area, and then move to another area and do the same thing and keep going. It's going to be harder to find seller financing deals like that. Okay. So the other way you can do this, and I've seen people do this, they've done, hard money loans. I've never done this, but you're going to pay more for it. You're going to pay 10 or 12% for a hard money loan, maybe more than that. And you may be dealing with the mafia, probably not, but you can do that as well. And it's actually not. I've seen people do this successfully. Look, if the numbers shake out, if you're buying a 15 cap, then it doesn't matter if the interest rate is 10 or 12%. But I would be scared to do a very short-term hard money loan to where you only got 3 or 6 months to actually, work out and pay the guy back. Maybe it would be good until you figured out a different financing option or something like that. Let's say you're like, okay, I need to get this deal closed fast. You get a hard money loan for 3 or 6 months, and then that gives you some more time to go find a lender. that will do this deal. So that's possible. Um, and those are really the only three things. I mean, look, I'm sure you can get more creative about it, but I think when you're going into these deals, like what people and I'll say this again is like, what kind of deal do you want? What's the location? Like, and find good deals that fit that box. And when you find a deal that fits that box, if you're looking for seller financing too, there's going to be less deals for you to buy because it's not as prevalent as you may think. Or maybe I just suck at negotiating seller financing. That's possible too. And some of you guys listening to this are like, Derek, I've done a ton of deals seller financing. You just suck at negotiating it. Maybe that could be possible. But I'm just looking for good deals. And if seller financing is good for the seller, then it'll work. But if it's not, I don't care. I don't care if we get it or not. It does make it a little bit easier. You can probably close a little bit faster, but it's not the end all, the end all be all. Granted, I see some guys online that's all they're like, I only do, seller financing deals. And I just, that's fine. You can do that. But that's just not my game. I'm trying to buy great deals. I like to copy what the big guys do. The big guys, the Blackstones and the large operators in this business aren't going into deals saying, hey, we just do seller financing. And yeah, well, if you hold the note and my dad will hold a second and, we'll just, flip this and that and you assign your note to us. No, they're looking for great deals because they have a strategy. And that's what I do. I mimic those guys. Um, and so that's what I would tell you. And you can call me, whatever. I don't care. I had a guy on here one time who had gotten some great deals via, creative financing, and it was great. And it sounded like he had done really well in that, but his deals were in kind of weird areas and sort of all over the place. And it was working for him, so maybe that works for somebody. But for me, in my opinion, it's not going to be the end all be all, and it's not going to be the only thing that determines where my business goes, or the only thing that determines how successful our business plan is, and how that's going to go. Because I can get, let's see what we can get today. So depending on what your lender is, I guess indexing here, like if it's the 5-year treasury or the 10-year treasury. So the 5-year treasury right now is 3.94. Ever since this damn war, it's gone up. And so whatever the spread is with the bank, we can get probably a 300 basis point spread. So we'll be at about 6.94 today. Some lenders are going to give you a 3.25, a 3.5% spread on some of this stuff. Now, don't get tricked. Like, do not do this. So you're going to go out, you're going to hit up a couple lenders. And one of them, which is going to be a mobile home park lender, they're going to give you, let's just say they give you the 5-year plus 325 basis points. So you're going to be a little over 7 right now, about 7.2. Let's just round it to say it's 7.2. But then you're going to have another credit union that's like, we can get you 6.5%, 70% LTV, no questions asked, or maybe even 75 LTV to get you really lured in. And it's going to be fixed. It's going to be 5-year term. It's going to be like no prepayment penalty or something stupid to get you in there. And you're going to be like, oh man, dude, it's 1 point. It makes a big difference. So here's the caveat. They don't have any MHP experience. Yeah, they've looked at some deals, and I'm giving you a real example of a bank that we tried to work with on a deal. They're going to tell you, yeah. Oh, yeah. We've done a few. In reality, they haven't really done that much MH because they don't know the business. So you're going to go with them. You're going to be excited. They're going to be excited. You're going to get them the info. It's going to go down. You're going to do your due diligence. You're going to get the reports. You're going to get them all your real estate. You're going to show them your net worth and your personal financial statement. Everything is going to be cool. And then when it gets down to it, they are going to go look at this park and be like, maybe they'll end up doing a deal. But I've done this twice, and I will never do it again. I will never veer to the lender that has little to no MHP experience, because they're going to come back and say, I actually had this happen. The someone on the loan committee didn't like what the park looked like. Okay. And so they're like, we're going to pass on the deal a week before fucking closing. Excuse my French. And I'm like, oh, yeah, great. That's cool. Like, I almost wanted to tell the guy to screw off on the phone. Nice guy, by the way, but still, like, that is so dumb. And this deal, we were buying this deal at like 28,000 a pad here in the last 6 months, in a market where stuff's selling for 60 and 70. It was a total steal. Look, come to find out, it had a big electrical issue that we could have handled because we were buying it for so cheap, but we just didn't want to deal with it for various reasons. Probably should have ended up buying the deal anyways, now that I've, sort of figured out some of this electric stuff better. But the point being is that this deal was like a 14 cap, right, on paper. But because the someone on the loan committee did not understand this business, and this is what a lot of us do in this business. We buy these value add parks and we go in and pave the roads. Yeah, there's potholes in the road. That's why we pave it. That's why we're buying this. All the, the financials are on paper. I got it, right? Yeah, the houses look like crap. The electric poles are messed up. Yes, this is exactly why we're buying this, because we go in and fix these things. Now, and then it's going to piss you off. The second time, it's not only going to piss you off, is that you're going to have to go back to the seller and tell him that you can't close and you need an extension. Okay, I had to do this. We were like 2 weeks before closing. This is the second time I did it. Well, the last time I told you was actually the second time I did this. This time is the first time I was like, yeah, we'll go with another lender because their terms look better. And 2 weeks before closing, they're like, yeah, Derek, we're not in really a rush to get this closed. Not really sure about the deal. And this deal is a slam dunk, 50 a pad on the Space Coast of Florida. Stupid. This is last year. Like, good luck finding that again. Another one for 50 a pad. And I'm like, this deal, like, they were like digging into this thing and started, like, I was starting to question. I'm like, well, is there something? Am I missing something on this deal? Is this deal not that good? And I'm like, no. You know what you're doing, Derek. And so, yeah. And this was the worst part about it. I had to call the seller and say, hey, man, by the way, we need an extension. We can't close next week or whenever it was. And then I had to convince the seller, hey, we've spent a bunch of money in due diligence. We'll put, another 40 grand. We'll put 40 grand hard in addition on earnest money. And so, like, you can work through that stuff, but it's not ideal. Like, I don't like that, right? And it's just not a fun conversation to have, but you got to be willing to have it. But we would have avoided that, and probably, if we just would have went with the other lender from the get-go. But not only that, we had to get like another 30-day closing just to make sure, because we went back to the other lender and I think they ended up closing like maybe 25 days or something. But still, after we had already been under contract for like maybe 70 days, then we had to ask for another 30. Wasn't ideal. Wasn't ideal. I mean, the guy could have just been like, screw you. I'm out. We're done. But look, when I get into these types of situations, I don't freak. I might get pissed for a second, but I'm like, okay, what are we going to do to close this deal? Like, this is my deal. I created the opportunity. I'm going to close the deal. Like, that's where my mind goes. Like, I don't get into this like, oh my God, what are we going to do? I'm like, hey, we're still going to get this deal closed. And I know we're going to get this deal closed because we're going to win. That's what we do. That's what us as entrepreneurs do. We win. We make the impossible possible. And if you're in this business and you've closed a bunch of deals, I mean, I can't imagine there's been very many deals that were just super smooth sailing. Now, I will say we did close one in Orlando. I think we got everything done in like 45 days or something, and closed in 45 days on a 60-day contract with an option to extend. I I don't know why that one went through that fast. I think it was just such a good deal, and I mean, it was just it was just able to get jammed through fast, and our lender had they know what they're doing and whatnot. They have experience in this business, but you're not going to have many of those. I mean, you're going to have bumps in the road when it comes to these deals. You may come in, the appraisal comes up short, and you have to answer some questions, but nonetheless, this is some of the reasons why I like working with a mortgage broker, because if they have the relationship with the lender and some things come up, they can sort of help massage that deal across the finish line, because you guys know what you're dealing with here. You're dealing with handwritten rent rolls, you're dealing with yellow paper, you're dealing with sellers that think they have 12% expenses. You're dealing with sellers that still think that they should collect the park owned home rent after they sell the park. Real story, by the way. Um, ask me about that one if you see me. You're dealing with stuff that is not is probably as far from perfect as you can get, and you need that. Like, that's why I like working with a mortgage broker, because they can help you massage that across the finish line. They understand the business, and if you're working with a lender that understands the business as well, it's going to make it even easier for you to get that across the finish line. So, yeah, look, that's what I would say about financing these parks. If it still can be difficult depending on which lender that you are using, right? And let's just see if it let's see what it says. Is it easy to get a mobile home park financed? It says it's not easy, but it's very doable. I was just curious as to what AI said about this. Now, this is a good point here. Like, you need to find your, lenders. Lenders obviously like tenant-owned homes because the tenants are sticky. But if you're doing a park-owned home conversion, or it's half and half or something, you gotta definitely show to the lender and express to them the experience that you've had in doing that, or at least have a damn good business plan to show them how you're going to do that. And so it's a little bit easier for us to do that. Now, the other thing that's going to be difficult when you're doing some of those park-owned home deals like that, or if there's vacant homes, is that DSCR literally drives these deals too. Um, and so some of our lenders it's a 1.3 DSCR or 1.35. That means that the NOI has to be 130 or 135% of the loan payment amount for them to feel comfortable, because they want a little cushion there. Right. And so in the beginning, they may do something what's called an earnout. They will give you 55% leverage up front, but they'll give you the other 10 or 15% after you can show like a trailing three, the last 3 months of when you've gotten occupancy up, and it's now at a 1.3 or a 1.35 debt coverage ratio. So then you can go back to them and they'll give you that extra cash. Not ideal, because you have to come up with more money up front. But honestly, when we ever have that happen, I don't get as mad as I used to be. Like, I do push for as much leverage as possible, because I know the deals that we're doing, we're going to easily get them up to the debt coverage requirements. But it is nice being super low leverage on some of these deals. You're 55% leverage. I mean, you're you're in a good spot there, no matter what happens. So that's an interesting yeah, that's just something you want to think about too. I mean, I wouldn't go into every to every deal and assuming you're going to get 70% leverage. That's why if you've got a heavy value add deal in the credit union that gives you the best terms in the universe, um, especially if it's park owned home turnarounds, I'd be a little you know worried about that one actually getting to the finish line. Now, the one little last thing, if you've never done a park deal before, this, getting a deal financed through a bank is going to be a little harder to do because you're going to have to sign recourse. Rarely does someone buy a deal big enough and clean enough and to get to. Rarely is anybody going to be buying a deal that qualifies for non-recourse debt in the beginning. I just haven't seen it. Like Fannie or Freddie agency debt. I just haven't seen that. So you're going to have to sign recourse. You're going to have to guarantee the loan, right? And if you don't have the net worth to do it, you're going to have to find someone to help you, and you're going to have to give up a piece of the deal to do that. And so if you've never done a park deal before, you're going to have to just jam this one through. And the first deal through a lender is going to be a pain, especially if you haven't done a park deal. I don't know why this is, but the first deal is always a pain in the ass to close. It just is. It just is. There's stuff, there's just stuff that comes up that it's like you get tested and like, hey, you ready for this, dude? You really want to do this? Because if you really want to do this, we're going to put you through some crap before you actually have to get this across the finish line. And don't be a dumbass and quit. Don't be a dumbass and quit and say this is too hard. The people that get in and say, hey, this is too hard, the business isn't good or mobile home parks suck. Like, you're a quitter, dude. You're a quitter. I don't like to sell. Nobody wants to sell. You're a quitter, dude. You're a quitter. Look, so I hope this helps on getting these parks financed. If you have any questions about that, just shoot me a message. Shoot me a DM. I'd love to go into this financing stuff and into a little more detail. Well, one thing before I end off here is like when you're working with a lender and the seller sends you written financials, don't send them the written financials. I mean, you're going to have to, because what is it, right? You're going to have to build that out yourself. Like you're going to take all the expenses and put that together and send that into something that's like comprehensible, like that actually looks real. Okay. And I'm a little late on bringing that up in here, but I would just make sure that you do that. Again, so if you reach out to me, Derek at victorycapital.com, VICKTORY capital.com, would love to help you. If you have any questions about getting a deal done, getting a deal financed, I would be happy to help you with that. If you want to learn more about what we're doing at Victory Capital, you can go to our website, it's victorycapital.com. Would love to help you if you're an investor looking to allocate capital in 2026 into a recession-resistant asset with tax benefits and a lot of stability and growth potential. So thank you all for tuning in to the MHP show. I'll see you all next week. Peace.